Good morning, traders and investors. My name is Roger Scott, and I'm the Senior Strategist for WealthPress. Today is Monday. It's August 15th. The month is halfway behind us, and I have no idea where it's gone, but I do know that kids are back in school finally, and I can get a little bit more rest than usual, which is good. I could focus more on the market. The streets are a little bit less busier throughout America. It's business as usual. And typically when September comes around, markets pick up a little bit of steam. Matter of fact, September tends to be a pretty good month. August, we'll get into that right now. So again, it's about 8:36. The market's going to open up in about an hour and 24 minutes to be specific with you. And finally, we're getting a little bit of a downside. I mean, this market's been getting so bullish, people are starting to think that we're going to be making new highs next week. I'm just kidding. Let's not get ahead of ourselves. So as you can see here, we're a little bit lower. Let's look at this week's news. We got a medium flow. We got housing starts. Industrial production is going to be a big one. Retail sales is going to be the biggest, in my opinion. That makes up 2/3 of the economy. And we've got a bunch of earnings, retail earnings reports this week, which I will talk about in a minute. Then we've got existing home sales. Jobless claims is going to be a doozy. The manufacturing index, and let's not forget about the minutes, the Fed minutes. So we've got a lot to focus on this week, but the biggest theme is going to be retail earnings. And I'll talk about momentum levels, and I've got to have a real heart-to-heart talk with you guys. So tomorrow we got Walmart and Home Depot. Walmart is expecting $1.60 a share. Home Depot is expecting $4.93 a share. You guys know if the numbers are substantially better than this, then the stock usually goes up. If the number is worse than this, the stock usually goes down. Whether it's better revenue, lower revenue, it's all baked into the estimate. They're looking for a revenue of 7% rise for the year. I think that's reasonable. It's not too out of sight. And their EPS down 10%. Home Depot, $4.93 they're expecting. On Wednesday, we've got Lowe's. Then we've got Target and ADI. And again, all the expectations are right here next to it, so you could see everything here. Lowe's is expecting about 8.7% year over year and 1.8% higher revenue. I'm hoping that the revenue remains higher. Target, which had a really bad quarter last earnings, I'm hoping that their supply chain issues have been resolved a little bit and the number starts getting a little better. Then we've got Warehouse Club, BJ's, we've got Kohl's, we got Ross Stores, we got Foot Locker, a little bit of Analog Devices and Applied Materials to keep the week a little interesting. But you could see it's mostly earnings on retail. Now, I want to show you guys something, and I've been saving this for quite some time. Friday, look at the biggest gains: consumer discretionary, information technology, the three most speculative sector. Over a 5-day period, energy and these are in the back. I mean, markets are all over the place, but on a monthly basis, we can definitely see that consumer discretionary and information technology have been moving higher while communication services have not. But I want to show you guys something really quick. This is the NASDAQ 100, and this is the number of stocks trading above the 50-day moving average right now. Do you guys see that? That's a 20-year chart. But I want to show you that. So people are probably thinking, wow, this is really bullish. It is. But that's the 50-day moving average. Let's look at the 200-day moving average. This is the one that leads. This is the big one. This is the real big one. This is the emotional one. How about all stocks in the index? This is all stocks trading above $2. Look at where we're at right now. We're at 80th percentile. But when you look at, let me show you this. But when you look at this, we're only at 41%. We can completely decline right now. And look, we went up here and it can decline. So I wouldn't make too big of a deal about the stocks above the 50-day moving average. Let me show you something even more scarier. Look at consumer discretionary. That's retail sales, right? 21%, 97%. I want to show you guys this. You got to see this with your own eyes. Look at that. That's a 20-year chart. Do you guys think we're going to go higher right now, especially with earnings coming out on all of these stocks? Not much more to go. But look at the percentage of stocks trading above the 200-day moving average. It's a whole different world. Look at that. So I needed to show you this as we go into earnings. Look at that. We've barely begun. So consumer discretionary, the number of stocks trading above the 200-day moving average is only 20%. But the number of stocks trading above the 50-day moving average is 97%. That's way, 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 way too much too fast. And that's a market that's ready to cool off. And I'm expecting stocks to cool off. Now, in light of that, I want to show you some charts now. That's why I've been saving the momentum level studies. I wanted to really surprise you. On a relative strength basis, we're hitting the 200-day moving average on the Russell 2000. RSI is way, way overdone. On the QQQ, we haven't even got to the 200-day moving average. Almost. And it looks like we're way, way overdone. And look at the divergence we're having on the broad indice. That's huge, 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 huge. Higher highs, lower highs. Not even at the 200-day moving average. How about the SPY? So I believe we are going to. I believe we're going to position ourselves to go down. I think this is too much too fast. And when you look at these momentum studies, let me go to these momentum studies. You could see that. Look at the S&P 500. Look at the Nasdaq. 90% above the 50-day. 42%. Dow. 94%. Only 52%. And that's 30 stocks. Russell 2000, 83%, 45%. The number of stocks trading above the 50-day moving average is now twice as much as the 200-day moving average. That ain't good. 49, 82, 92, 45. And look at consumer discretionary, 97 to 21. That's a four-time ratio, over four-time ratio, folks. Look at Infotech, 95 to 42. And look at, where's technology? Where's technology? Oh, that is technology. Sorry. 95 to 42. I mean, look at that. That's not an index that's ready to go higher. Let me do this on a. That one looks like it's ready to retrace. So you got to be really, really, really careful right now because the market looks like it wants to cool off. And it looks like it's heading that way. And these momentum studies have you completely confused because if you look at the number of stocks trading above the 200-day moving average, we look still fairly bearish. We're not even above the first level of support. But again, if you look at the 50-day, it looks like an eager beaver. It looks like it's been in a race. Look at that. That's too much too fast. That's suckering in traders and investors. That's an index that wants to sell off. Now, let's talk a little bit about global economy. World shares were mostly higher early Monday after Chinese central bank cut a key interest rate, and Japan reported its economic activity picked up momentum in the last quarter. People's Bank of China cut its rate to a one-year loan to 2.75% from 2.85% and injected some cash into the economy after government data showed July factory output and retail sales weakened. Tourism has rebounded after 2 years of tight control to fight COVID, but only to about a quarter of the pre-pandemic level, a quarter. That's why stocks like Expedia, like this stock right here, I'm very skeptical about it because things are moving better, but they're not doing all that much better. Let me look at where we are, 213, 113, not feeling it at all, not feeling it at all. Let's talk a little bit more here. Major indexes got a bump on Wednesday after reports showed that inflation cooled more than expected. Another report on Thursday showed inflation at the wholesale level also cooled, but I think this is too much too fast. People are getting too excited. This week, Commerce Department releases retail sales for July, and Walmart and other stocks, as I showed you, are having earnings. It's a big, big retail week. Investors have also assessed the health of the housing market when they get a report on home sales for July at the latest earnings for Home Depot. And I showed you all of these earnings that are coming out. And again, tomorrow we got Home Depot and Walmart. And I'll take you through them as we go. Now, let me go through some stocks with you, some indexes with you. Now, again, I think the S&P right now, let me just go through this here. I think the S&P is just really overdone. And if you look at the long-term trend, it could easily bounce from this level and cool off. Now, do I think it's going to go all the way to the bottom? No, but I think we're going to stay in this range. Also, if you look at the bond market, which the discretionary sectors have been following, they haven't really been moving too much above this area, while consumer stocks like XLY have been going absolutely crazy. Look at this. See, they've been moving up. And I think it's too much too fast because of the earnings, and I think they're going to revert back down here. And I think this week is going to be the first major week to remind us that earnings are still, that we're not completely behind this yet. Now, I'm a lot more bullish, or I was a lot more bullish than a lot of the pundits out there on TV. But I got to be realistic, folks. And when you see consumer discretionary, the number of stocks at 96th percentile above the 50-day moving average, that tells you it's too much too fast. And this is a market to fade. I hate to say it, but right now we got to fade this market. Now, I'll update you further on in the week, but we do have some important dates. You got to remember them, like the FOMC minutes. Retail sales is going to be huge. But the biggest thing is going to be the momentum levels. I think momentum levels are overbought, and it's going to catch up with the market. I mean, again, 200-day moving average, we're just here. If we were at 60th percentile, I would tell you something differently. But having 97% above the 200-day, 50-day moving average, and then having 27, look at that, 97%, 42%. That's not fooling anyone. Now, folks, nobody else is giving you this kind of information, and I'm going to be all over these momentum levels this week. Now, folks, this is big. Today is the day. My 3-day Frontrunner Vital virtual workshop kicks off in a few hours at 12 o'clock Eastern Time, and I couldn't be more excited. If you haven't gotten your ticket, make sure to click the link below if you want in. It's going to be very, very cool. I'm covering exactly what it takes to build your own home-built ETF, home-brewed ETF, or a rotational program. You guys are going to love this. You'll see the core factors, how I isolate the select front-runner stocks, and learn how to upkeep the entire portfolio. This is very, very, very cool stuff. I've been asked to do this for years, and I'm finally going to do it. So if you're ready to invest in your financial future, and I hope you are, and curate your own personal ETF, don't miss my virtual workshop today. Even if you're not ready to do it yourself, you should learn how it's done so when I do it for you, you don't get all bent out of shape. Claim one of the last tickets by clicking the link below. I think we sold like 190 spots. It's crazy. I'll see you soon. Follow the link below. You'll want to watch this at least 10 times. The data that we've curated for you guys is amazing. And you guys are going to love it. I think Matt and I outdid ourselves again. Follow the link below. Have a great week. And remember, it's going to be a very, very murky week because you got a lot of retail. And I think retail is going to go negative this week. I'll talk to you guys later. Have a great day. Comments, feedback, love letters. I got to hear from you. Bye, guys. I'll see you later. Follow the link below. Don't miss out. It's happening in less than 4 hours, like 3.5 hours. This is going to be cool. Bye.